Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Today we have Peter Krauth, former portfolio advisor and 20-year veteran of the resource market. And he also has a new book called The Great Silver Bull, Crush Inflation and Profit as the Dollar Dies. Peter, it's great to have you back.
Well, it's always a pleasure, Ivan. You and Jim, I love talking to you. And I think that our audience certainly is well targeted with this book.
Well, I saw that your book is #1 on commodities trading for new releases on Amazon. So congratulations.
Thank you very much.
Yeah. Nice. So can you give us the quick synopsis of what, obviously it's about silver, but what are the highlights that you're really focusing on in this book? And the link to the book and where people can get it is going to be in the description below.
Okay, super. So overview of the book, I mean, really, it's in 5 parts, but to simplify, you could really say it's in 2 parts. The first 2 are the history of silver as money, and then, what I call financial shenanigans. And so that's kind of more the current setup where we are economically with reserve currencies, unbacked reserve currencies, and potentially, a new role going forward, if never officially, at the very least in terms of a great investment that's very much undervalued, but with great potential upside. And then the second half talks about where silver could go ultimately. We've talked about this in previous interviews. I think silver is going to at least $300. And then I talk about how to invest in silver, everything from bars and coins all the way to junior explorers. And then I talk about how I would build an ideal silver portfolio, how to manage the portfolio for risk and volatility, and ultimately how to eventually, all great bull markets, even this one will eventually come to an end. We're several years away for sure. There's lots of money to be made, but ultimately you're going to want to take a lot of profits and lock those in. And I talk a bit about how to decide when the time has come.
So Peter, a lot of people are looking at this current economic situation we're in as a parallel for the 1970s, stagflation. The Fed is trapped. They can't really raise interest rates to too much more. They're going to kill the economy. But if they don't raise interest rates, they're going to let inflation run out of control. So what's the, I know you go over this in your book. Can you sort of briefly walk us through at a high level what you're talking about?
Yeah, absolutely. So the 70s is probably the best analog we have for where the kind of period we're entering now. And I've been saying recently, I think that inflation is going to be the defining feature of the rest of this decade in terms of, the investment environment. And if you look back at the 70s, there are very much some strong parallels. There are some differences as well. But as far as parallels, inflation was strong, the economy was weak. And so silver did incredibly well. Gold was up 14 times. Silver was up 37 times, easily doubling and obviously outperforming gold. What's different? Well, I think that in the 70s, if you look at debt to GDP, that was 35%. Debt was 35% of GDP in the US. Today, it's 130%. So, I mean, you talked about that. I mean, in this, your intro to this segment, well, the Fed's dilemma is that it really cannot raise rates significantly, not enough to make a dent in inflation. It knows it needs to, it knows it should. We all know that, but it can't. So it can't because national debt's too high, because business debt is too high, because consumer debt is too high. So I think what's going to happen is it's going to start raising rates. It's going to see that it can only go so far, which will not be very far from where we are right now. And then it's going to have to stop and potentially even start to back off. And that means that, the lesser of two evils for the Fed and other central banks is to just let inflation kind of run and sort of, manage it by talking and saying, yes, it's temporary. We're doing
transitory,
this.
Right?
It's transitory.
Yeah, exactly. Expectation, sort of management.
You're talking about jawboning the market. They're going to try to talk it down as opposed to actually taking the pain of actually really raising rates, Paul Volcker style.
Exactly. Impossible today. Completely.
Yeah. So right now, all the political pressure is on. We got to fight inflation, right? But at some point, the economic data is going to get measurably worse, either in unemployment or the stock market's going to just completely capitulate, or the housing market's going to fall apart. Is there a point where you think, all right, the pivot's coming, the Fed has to go back to easier money, and that's when the silver and gold markets take off, when everyone realizes the Fed can't fight inflation? Is that the gist of the
That's
investment thesis?
Yeah, that's a good summary of how I think things will play out. You know, uh, like you said, they're going to jawbone, and they're going to kind of, sort of keep building expectations in one direction. And at some point, much like we've seen with this whole thing of, inflation being transitory, at some point, it's a game of chicken, and they kind of, they get called on it, and they can't do much. And so when the market sees and realizes that, I think really all bets will be off, and gold and silver will absolutely take off, and it will be absolutely the sort of the true firing or starting gun, the shot that really starts things off.
So, Peter, in your book, you say silver is an irreplaceable metal. Can you explain your thoughts to our audience?
Yes, definitely. So, it has a very, very particular, I guess, profile in terms of demand. Your listeners probably know this, but about half of silver demand goes to the industrial side, actually about 55%. And then the rest is a mix of mostly some form of investment demand. But on the industrial side, the interesting thing is that about 10% of all silver demand actually goes to one application, which is solar panels. And so with the green economy in full swing, lots of support and push from governments worldwide, we certainly expect that is going to continue. So in fact, it's probably more going to be closer to 11 or even 12% this year in terms of silver allocation going to solar panels. And then you've got all sorts of other applications that are in growing industries, all sorts of things like electronics, automotive, electrification of vehicles, medicine. It's really, a bit of what I would call a wonder metal as well. I kind of call it the Swiss Army knife of metals, just because it could just do so much.
Well, that's a good point you make with solar is, we mine about 800 million ounces a year. And the last number I saw, about 80 million, about 10%, like we said, maybe a little more this year, my data's probably old, goes to solar panels. And they can't get rid of the solar. They've reduced it as much as they can. They can't get rid of any more. So they just need a certain amount of silver in those electrical contact points for solar panels to function. So 80 million ounces per year has only gotten us to about 2% of the electric grid being backed by solar, right? 80 million ounce, 10% of solar supply has only achieved 2% of the grid, the electric grid, being powered by solar. So you do that math, and I hear governments talking about, oh, we want to take it up to 30%. I don't think that's realistic. There's not enough silver for that, right? But even if they got up to 10%, let's say, of the electric grid being, solar, which is probably realistic. I mean, you can't go too much in the solar wind direction, otherwise
Right.
the grid becomes unstable. But from what I've seen from experts, 10% of the grid being solar is probably feasible with that. And you just said, all right, 5 times the silver of what they're consuming now at 80 million. That number comes up to like 400 million ounces of silver per year just to get to 10% and maintain it at 10%
Wow.
of the grid.
Exactly.
So that we're talking 50% of globally mined silver going just to solar, probably within the next, I don't know, 10 years or so.
That's right.
Are those crazy numbers that I just threw out there, or does that make sense?
Not at all. If you factor in, and I think this is probably even conservative given what you've just said, but if you factor in the other applications and the growth for automotive, for electronics, for medicine,
Right.
Some forecasts are for by 2050 that silver mining would have to double. And I mean, I think that's highly
unlikely. It's more likely to decline from here than anything else due to the declining ore grades, right?
Exactly. And an interesting point about that relates to what you were just saying is that if I've got this right, in terms of renewables, solar is the cheapest renewable. And so for that reason, naturally would get a lot of support, right? You'd want to push, and in an economic sense, you'd want to expand the generating capacity from the cheapest source. That's solar, and you're trying to do that, yet you need that much more silver. That's a big dilemma. I mean, where that goes is going to be very interesting to see. But
I question whether they're ever going to get to even 10%. I just don't think there's going to be enough silver supply. Who doesn't get their silver then, right? Who's
exactly.
not going to? I think Apple's going to. It's not going to be Apple. It's not going to be Tesla. It's not going to be Samsung, because their margins are just ridiculously profitable. So they can outbid everyone for supply.
Yeah.
I think investors like us, or a really thin margin business, is these bars and coins that people like us like to buy. And I think those are the people likely to be squeezed out of the market, right?
That's right.
So Peter, one of the other issues that's been out there that you've written about and spoken about is what various states are doing at the state level in the United States to promote gold and silver. And I know there was an interesting one in Idaho recently that you've been talking about. Can you walk us through that?
I sure can. So Idaho passed House Bill 522. So this is at the state level, not yet at the Senate level, the House level, I should say. And so that's supported by the Sound Money Defense League. They explained that what it would do is it would permit the state treasurer to hold some of the state funds in physical gold and silver. And if you look at what Idaho has, it's about, I think it's $10 billion. Most of that's in bonds. Treasuries, that kind of thing. And if you look at the yields on those bonds and what's happening with inflation, they estimate that they're losing, because of inflation, about $500 million a year. So that's not good for for state residents. So if you look at what's happened, MicroStrategy bought a lot of Bitcoin because that's a hedge they feel for their cash balance. You have Tesla that went out and bought a lot of Bitcoin as well. And then in January last year, changed their investment policy for cash that they don't need to operate the business, allowing themselves to invest in gold and gold type investments, ETFs, et cetera. And so when I saw that, I realized that, that could put a lot of larger companies, especially companies, on the defensive. I mean, I could ultimately see where you'd have a lot of shareholders saying, well, wait, you've got a ton of cash. You're sitting on a ton of cash. Early last year, about a year ago, I did the math to see how much cash the FANG stocks were sitting on. And if you added it up, it was about $500 billion in cash. So $500 billion.
Wow.
Just sitting on it, eh?
That's a year ago, right?
Yeah.
So they were sitting on $500 billion of cash. And if you think that that's losing 6-7% a year, to me, at least, it's not beyond the realm of possibility that shareholders are going to start saying, well, what are you doing with this cash? You just keep sitting on so much cash. You're losing 7-8% a year on that cash. Find better ways to invest that cash. And I mean, I could certainly see where some companies will start looking at proper hedges. Silver, gold are ideal. Silver's very cheap. Your followers probably know, highly undervalued asset, probably one of the most undervalued assets today. And so I talk about that, and I talk about how and why gold, silver can go to $300, and based on its current price, not in any way unreasonable.
Yep. Well, Peter, thank you very much. The book is The Great Silver Bull: Crush Inflation and Profit as the Dollar Dies. And the link will be in the description below if anyone wants to, check it out. You had a nice piece written at the beginning by Ross, also as part of the book. Congratulations, and I hope it sells a bunch of copies.
I sure do too. Thanks so much, guys. Pleasure always talking with you, and look forward to the next time.